Hi, Lynn.
Hey, how's it going?
It's so good. So good to see you. So good to do this in person.
Yeah, you as well. We got this nice view here.
Yeah, we can just see the top of the Empire State back there.
Oh, nice. Oh, yeah, I see it.
And we got Schiff with us.
Two pictures.
Yeah, Cullen brought that one with him.
Really?
Yeah.
Oh, that's funny.
So now anyone coming has to bring a Peter Schiff photo, and we're going to have a whole collection of them. I'm going to be carrying a big bag of them with me everywhere we go. We've had a year of just doing this on screen, and I prefer in person. So I really appreciate you coming in to do this. We've covered a lot of stuff this year, and I talked about the idea that if we got together at the end of the year, we'll do a bit of a review of the year. But I was thinking about that; it's just a bit boring. It's just like regurgitating what we've talked about, and really, actually, I'm more interested in the future, in the next decade. And one of the things that keeps sticking in my mind is when I talk to Balaji about currency wars. And the more I think about it, the more I realize that digital technologies, cryptocurrencies actually enable that a bit more. I feel like there's two forms of currency war that we're facing. It's between nation states and then individuals choosing to opt out of nation state currencies. So felt like that would be a good show to make. What do you think?
I think so. I mean, basically, the whole monetary system is poorly understood by most people. It's kind of a Rube Goldberg machine under the surface. And there are a handful of people that have been kind of analyzing it in depth. I mean, Alex Gladstein does a lot of articles on kind of the nuances of it, kind of the costs of maintaining it. And I don't think a lot of people just understand how much work went into setting up the way it is. It's not like an accident the way it got set up. And they also don't necessarily understand the resource cost, multiple types of resources for maintaining it the way that it is. And so when they talk about, other forms of money and how they have resource costs, they don't realize that the existing system does have resource cost and causes all sorts of problems.
Thank you, taxi driver. We get the beauty of New York with us here. So what is it that people don't truly understand then?
I think that how much of the system is designed and also specifically some of the costs of the system. And so, for example, they don't know that for example, in the 1970s, there were various deals set up between the United States and Saudi Arabia and other OPEC nations to make it so that they only price their oil in dollars, regardless of who they sold it to, and that we basically used intentional tactics to try to put the dollar and specifically the treasury securities at kind of the heart of the financial system to try to replace gold. And I think that they assume that comes naturally. Like if you just have the biggest military or the biggest economy, that it happens organically, but that's not necessarily the case. I mean, countries that achieve that type of status with their currency and their bonds generally do so by design. And so the UK pushed for that system in the prior system, and the United States has been kind of pushing to maintain the system, constructing it, maintaining it this whole time. And so I don't think a lot of people focus on the fact that a lot of it's designed and that there's all those costs with it.
What was the primary benefit to the US of putting the world on a dollar standard, following the gold standard?
Well, so after the gold standard failed, I mean, we can go back to a couple eras. So prior...
Sorry, just jump in. Did it fail? Why would you say it failed?
The gold system?
Yeah, isn't it just that nations chose to come off it?
Well, there was a couple different failures in a row, right? So if you go back far enough, there's the gold standard, where countries are on their own gold standard. And part of it was that gold was centralized, right? So we can say it in hindsight, but also, for example, Henry Ford was writing about it in the 1920s, how gold was failing because it was being centralized and therefore was enabling war. And so part of why it failed was it was highly centralized, and then countries could debase their currency and not make it redeemable for gold, and then sometimes repeg it to gold at a lower rate or just not repeg it again. And so that was kind of the first failure of the gold system. And then the second one was kind of like the last-ditch effort to maintain some semblance of it was the Bretton Woods system. So from 1944 to 1971, we had kind of a pseudo-gold standard, which was that the dollar was backed by gold, and then other currencies pegged themselves to the dollar. And again, this was designed. This was, there's actual agreement called the Bretton Woods. They met in that area in New Hampshire, and they actually put this together. And so this was not an accident. And that system didn't last that long because from the beginning it was inherently unstable. Basically, again, we have banks are able to create money, essentially. By making loans, they create money. And gold is highly centralized. And gold was only redeemable to foreign creditors, official central banks. So Americans were barred from owning gold. They couldn't redeem dollars for gold. Foreign private sector couldn't redeem dollars for gold, but foreign official central banks could. That's what kind of maintained some degree of repute with the system. And that eventually failed, essentially because you created too many dollars compared to how much gold the United States had. And so foreign nations, including France and others, started to realize that I'd rather take the gold than hold these dollars and treasuries. And when that system was what they basically called the bluff on it, that failed. So you can say that the ultimate reason was that gold was able to be centralized. That's the biggest flaw. And then because it was able to be centralized, you could completely untether the amount of currency units in the system compared to how much gold units are in the system, and therefore pegs break. There's kind of this saying in finance that eventually all pegs break, because if you don't have a meaningful way to maintain that peg, it's just artificial. It's like you can't just will it into existence. You actually have to have the constraints in order to maintain the peg. So some pegs can last for a very long time. They can last for decades, but eventually imbalances build up in the system and it fails.
Right. So you can't have fractional reserve banking on a gold standard.
At least not in the way they did it, right?
Yeah.
So you could have free banking on a gold standard, for example. That's a more sustainable system. There's no kind of it's still tricky to maintain, but there's no inherent reason why it has to fail. Just that they eventually did fail. They kind of you chip away at one piece at a time. You start kind of centralizing it, and eventually it can fail. I think the system that fails from the beginning is to have all gold centralized, so that banks don't even hold their own gold anymore. And then it's kind of fiat all the way down until you get to the very core of the system, because then it only takes a handful of actions to sever that entirely. And so going back to your initial question, when we transfer from a gold system to a fiat system, you can imagine the chaos overnight. I mean, we never had an environment where virtually every other currency other than Swiss franc just was rendered fiat pretty much overnight. I mean, there's still kind of a transition period where actually it was not just that 1971 proclamation. There was a couple-year transition period where they tried to salvage it to some extent, but essentially you had a very abrupt transition where the entire world had no underlying basis for its currency anymore. Obviously, you ran into inflationary issues. Then you had geopolitical issues because the United States, our oil production peaked in 1970. So we became increasingly reliant on foreign imports. And of course, you had wars in that area, and they could use their oil exportability as a tool to basically have us not choose one side or choose another side. And so in 1974, they basically salvaged that system. So basically under the Nixon administration, they made an agreement with the Saudis and eventually all of OPEC so that they would only sell their oil in dollars. So regardless of who buys it, if France buys it, if Japan buys it, whoever buys oil that has, basically has to import it from the Middle East and other countries, they have to do so in dollars, which means every country in the world that is not energy self-sufficient needs dollars. So they either can exchange their currency to get dollars, or they can start selling their goods and services in dollars as well. And so that's kind of an intentional design choice. And the way we were able to do that is because the United States has by far the largest Navy in the world especially during that time and ever since. We're also at the time we're the biggest commodity importer and the biggest economy. We still are in some ways, but for example, China's catching up in some metrics and they've surpassed us in many commodity imports. But back then, it made sense in some ways. And the United States perspective is, one, they wanted to salvage the system that had chaos overnight, and two, there was still the Cold War going on. And so, for example, there was this policy where the United States did not want Soviet Union to move into the Middle East and have access to all those diplomatic ties and the resources in that area. And so that was kind of a way to try to have the United States secure that region. And so some analysts have argued, for example, Luke Roman have argued that, in the first couple decades of that system, you could see why it made sense, right? There are trade-offs for it. But some of the benefits, the exorbitant privilege, it's been called, makes a lot of sense. It basically gave the United States a very large advantage over the Soviet Union because we were the one country that could essentially print money to buy oil. And pretty much every other country either had to dig it out of the ground themselves or they had to get dollars to buy it. It's basically sell goods and services, get dollars, and then they could buy the oil. But after the Soviet Union fell in the 90s, that system became kind of a system without a purpose. It was not really kind of supplying any sort of geopolitical interest anymore, other than maintaining the momentum that was already there and maintaining the structure for the people that were benefiting from it at the cost of those that were not benefiting from it anymore.
And with the dollar becoming the global reserve currency, that would make the dollar a stronger currency. Is that what led to the kind of collapse of manufacturing in the US?
It certainly played a big role. I mean, to some extent, we've seen it worldwide, where obviously automation's been a big role. Anything that's kind of low cost and low margin, a lot of countries exported that type of stuff. For example, textile manufacturing. So the dollar's not to blame for every aspect of it. But if you look at the United States, it happened a lot more rapidly and thoroughly than many of our developed peers. And so, for example, in addition to exporting our cheap manufacturing, we also export a lot of our advanced manufacturing, whereas you see countries like Germany or Japan maintained a lot of their advanced manufacturing. And this comes down to, when every country needs dollars, as you point out, it basically strengthens the dollar. Now, it doesn't necessarily mean that it stays strong all the time. We've actually had the dollar deteriorate against many other currencies because we have these underlying imbalances continuing to grow. But it means that any given one time, if you have the whole world demands dollars, basically it's just all this extra demand. And so we end up exporting dollars to essentially meet that demand. There's an artificial amount of extra demand for the dollar. And so most countries, when their currency gets too overvalued, they start to get a trade imbalance. They get a trade deficit, and that eventually normalizes. Eventually, their exports become uncompetitive, and they have a recession, and then the markets eventually kind of sort that out. Same thing if their currency gets too weak, unless there's excessive persistent manipulation, eventually it kind of goes back to that median point. But the United States, because of the system we constructed, has been able to maintain a multi-decade, very large trade deficit longer than pretty much any other country out there. And so we've basically had the imbalances build up more and more without allowing that kind of natural error correction or mean reversion to occur. And that's, again, it's by design. And so the major beneficiaries of the system are those, close to the money printer. So if you work in DC, not just the politicians, but the lobbyists and all the ways to influence DC, the infrastructure around DC essentially, as well as Wall Street, as well as very, very high margin businesses, like, for example, information technology, healthcare, right? A lot of that, if you work in those types of fields, you did very, very well. If you worked in fields that make things, right? So you manufacture, or if you work in jobs that are associated with that. So, for example, there are, if you were working at a restaurant that served, upstate New York or somewhere else, somewhere in the Midwest, for example, a lot of that was deindustrialized. And so it wasn't just manufacturing jobs. It was all sorts of areas in the region. So you can kind of almost characterize it by industry as well as by region. Essentially, the coast benefited more or less at the cost of the center of the country. And so those imbalances have grown over time, and it can be very hard to pinpoint for a lot of people, where those causes are. They know that there's wealth concentration, but they don't know why. And just, so again, some of this is global. But for example, if you look at wealth concentration in the United States compared to many other developed countries, the United States is near the top of the list in terms of wealth concentration, in part because we've had these more deliberate policies that kind of gutted our working class and middle class type of jobs at the expense of kind of amplifying some of those really high-end jobs, or the ones that kind of control the capital.
Right. So looking forward, it feels like the petrodollar is starting to fracture. I was reading this morning about Russia and India agreeing to trade oil in rupees and what's the Indian currency? Rupee. And rubles. They've agreed that. There has been previous talks of, I think Iraq previously tried to move to a petro-euro. There's been talk of China and Russia not trading within the dollar. What would the impact of this be if the petrodollar was to collapse? What would the impact be for the US?
Well, I think there'd be multiple issues. So one, there's two layers of it. There's medium exchange and store value. So if they start to do medium exchange outside of the dollar and the SWIFT system, right, then that reduces the United States' sanctionability and essentially hegemon status.
Well, so the Russia-India deal was in response to sanctions to certain Russians as well.
Yes, but one thing is so a lot of this has been building for a while. So, for example, there was a Bloomberg article back in 2019 that I highlighted in my 2020 petrodollar article that showed that Russia and India have been already going along that path. They basically agreed to increase their trade and to start pricing it outside of dollars. And so we actually already saw that building up ahead of time. And now, of course, there are certain catalysts like we're seeing today that can accelerate that. So it's not like it just went from 0 to 100 this month. This has been building and growing for a while, and it's already happening along the spectrum. And so Russia's kind of at the heart of the de-dollarization in the sense that, they're a large oil provider, so that impacts the petrodollar system. And they have massive trade with Europe, China, India, and other countries. And so because they've been aggressively de-dollarizing, the fact that these other peers go along with it, many of them either neutrally or that they also have an interest in doing it as well, like China, for example, they de-dollarize. Now, there's two layers of it. So one is the medium of exchange, how they actually make the payments, because that can mean that the U.S. is unable to block them from trading. If they trade within a dollar-based system, the United States can block, two countries from trading that have nothing to do with the United States, which is kind of crazy if you think about it.
How do they block? Is it the specific transactions they can block? Because I don't actually understand how these dollar transfers happen.
So they cut them off from the SWIFT system.
Right.
And there are people that can go down that rabbit hole way better than I can. But essentially, if you're in the dollar-based system and you're using these interbank transfers, the United States has kind of veto power over that essentially. And so basically they can sever them from the system. And that happens in extreme cases, like with Iran, for example. They get completely cut off. Other times it's more kind of a, sanctioned without the nuclear option of just completely cutting them out of it. And so that's the medium of exchange aspect. And then the other question is where they hold their foreign exchange reserves. Do they hold treasuries, for example, or do they hold other things? And so Russia, for example, has decided not to really hold treasuries anymore and to hold mostly euro-denominated assets as well as gold and some other types of assets. And so they can go, generally if you start transacting in other currencies, the natural result is that you're going to have your reserves change as well. But in theory, they're kind of two separate decisions that can be made, store of value and medium of exchange.
So do you think that's why Russia has been increasing its holdings of gold?
I do. Basically, I think they've been trying for a long time to make themselves more sanction resistant, or you can never really make yourself completely sanction immune in this world, given how dollarized everything is. But there are some countries that if they're cut off from the SWIFT system, they're overnight they're in trouble. Whereas if you have enough of your trade denominated outside of dollars and you have a lot of reserves, and Russia has quite a bit of reserves relative to the size of their GDP, then they're very strong against that. So the more self-sufficient they are, and then the more outside of the dollar system they already are, the better they are. So Russia is actually arguably one of the strongest countries when it comes to being able to withstand heavy sanctions.
And so how is Iran able to trade? And just to add to that, a friend of mine went to Iran once and told me they had no idea that they wouldn't have access to any of the banking system there. Their Visa or MasterCard wouldn't work. And it was a bit of a problem getting into the country because they had the dollars they had with them, which wasn't a lot, but they had nothing else.
Well, yeah, you don't think about it until you are without it, right? Things that we take for granted, that they can be shut off like a switch if basically that country's outside of the global order, either for it could be that country's crazy or that country's doing something that powers don't like. So there's a range of reasons, and when you look at Iran specifically, there's been a couple different payment options. Europe tried, I believe it's called Instex, where they wanted to do euro-denominated payment rails. And that didn't seem like it really went anywhere. I was kind of surprised by that. They've been one of the early dabblers in Bitcoin, right? Because you have that permissionless payment aspect. Mm-hmm. And that's that comes with any technology. Anytime there's a new technology, generally some of the more unsavory characters are the ones that gravitate towards it first. And I like to use the example of beepers, pagers. When they came out,
drug dealers.
Yeah, drug dealers loved it. And of course, you could make the argument like, oh, look at these pagers and beepers, it's just enabling drug dealers. When of course there are all sorts of professions and reasons for people that want to use them. But naturally, criminals, and there's different types of criminals, right? There's objectively bad criminals like murderers and human traffickers and things like that. And then there's criminals that, if there's some countries where protesting the government is a crime and you're a criminal now, right? So
a few years ago here, buying weed would have been a crime, and people are still in jail for selling weed, yet it's legal in large parts of the country.
Exactly. There's a whole spectrum. There's ones that are obviously wrong. There are ones that, morals change over time. And then there are other ones where, like, literally they'd be considered heroes in other countries, or patriots or whatever, but in their country, they're considered criminals. And so naturally, people that have those specific problems, for better or worse, on the good side, you could be, cypherpunks or human rights activists. On the other side, maybe you are criminals or kind of a violent rogue state, whatever the case may be. those types of entities are more likely to gravitate to this because that's generally what they need. Payment is not something that comes easy to some of those groups.
All right. So we tend to have two/three superpowers, certainly the US and China now, and Russia kind of maybe like a half superpower. Maybe people consider them a superpower because of their nuclear arsenal, but it's essentially three superpowers pulling against each other. There seems to be a lot of alignment between Russia and China because they're both anti-American. What's the understanding of China within this kind of triangle of countries and how they use the dollar? And are they incentivized to move off the dollar as well? Do you think there's going to be a push for them to encourage people to be using their CBDC, for example?
I think so. So depending on how far back you want to go with China,
Let's go way back.
So if you go super far back, I mean, pre-modern history, they were a global power. They were a major, one of the biggest, if not at times the biggest power. And you can go into the Opium Wars, for example. They were ravaged by the West, right? So we tend to think of the evils that China does today, and they do a lot of evils. And I'm always happy to criticize them. But if you look far back enough, the tables were turned where the West was more so on the villainous side. So you can almost paint it like a movie where a villain has this like sympathetic reason of why they became the way they are. So if you look at it from their perspective, they've been bullied by the West for centuries. And so they have this very strong desire to rise up and be self-sufficient. And of course, that's a noble goal. But of course, then some of the ways they do it are gross human rights violations. And so when it comes to China, they've had this period where over the past several decades where they've kind of opened their economy to the rest of the world more, they've very much benefited from the dollar-based system.
Okay.
And so generally the advantage of a poor country, which they were decades ago, is that they can be very, very cheap labor and they can become an export powerhouse. And so when they opened up to the world and they were led into the World Trade Organization, they benefited very much from the system. And there's something called the middle income trap, where when a country's trying to develop, it's really hard to make the transition from your basically the cheap labor to advanced nation, right? There's actually very few countries that kind of make that full leap. They often get stuck in the middle because they get to the point where they're no longer the lowest cost producer. So They start losing some of their export advantages, but they can't quite keep up with, say, the most advanced nations in information technology or advanced engineering, things like that. And so they end up stagnating somewhere in the middle around that range. And so China's trying to navigate that gap where they had these multiple decade periods of being on the low end of that. Now they're in the middle part of that. They have a big enough population where they have an obvious military power. They are pretty advanced in AI and other areas of technology. They're trying to shore up their semiconductor technology, which is not one of their stronger suits. And so they have a lot of incentive over time to become more self-sufficient. And if you look specifically at the dollar system, one of their biggest weaknesses is that they are very reliant on commodity imports. They don't have much oil. They have a lot of coal and other commodities, but there's many commodities that they have to import, including many types of food and energy. And so for them to be sanctioned, for example, would be devastating. If they were just cut off from the dollar-based system, they'd be, in my view, probably less resilient against that than something like Russia, right? Because Russia is more commodity secure. And so China would be in trouble. And so they've spent many years kind of slowly kind of turning this gap. And so one was back in 2013, they announced that it no longer makes sense for them to keep taking all of their dollar surpluses and reinvesting them in treasuries. Because the United States' system over time has been essentially that we're happy to run trade deficits with you, but take those dollars and go ahead and help us fund our deficits, right? So hold dollars and treasuries as your reserves. And so Saudi Arabia did that, Japan did that, Europe did that. They all went through these periods where they grew very rapidly. They were the big exporters, and they would hold it in dollars. And China went through that period as well. They amassed over $1 trillion in treasuries. And eventually they said, we have enough. It's not really in our interest to keep buying these things, especially, we saw the global financial crisis. These yields are poor compared to inflation. And so we're going to start doing other things. And then they announced the Belt and Road Initiative. So essentially what we've seen is that, China uses a lot of their dollars.
Sorry, just to jump in there very quickly. Is that why the Fed has had to start buying treasuries themselves?
I think it's part of it. We've seen a drop-off in foreign demand led by China. Now, it's not, you see headlines like foreigners dump treasuries. They haven't dumped treasuries. They still hold more treasuries than they used to, but the percentage of total U.S. treasuries owned by the foreign sector has been shrinking because they've not been buying treasuries as rapidly as we've been issuing them.
Right.
And so generally any country, when they get over a certain debt amount as a percentage of GDP, the central bank becomes the major buyer of their government debt. And the United States is no different in this case because foreigners have dried up their purchases to some extent.
Right, okay.
And so with China, they've been more specific about it, where they said, okay, instead of buying treasuries, we're going to start using our dollars to make loans to different countries around the world, help build out infrastructure to help cement China's, hub, basically as a big trade partner along Eurasia and into Africa and, around pretty much the whole world, essentially. And also to secure commodities. So they'll invest in commodity projects around the world that they have rights to. And so they're essentially taking dollars and putting them into various types of hard assets, and basically doing kind of that, almost that type of financial colonialism that the United States and the United Kingdom have done in the past. They're doing a similar approach now. And so they're kind of rising to that superpower status, despite the fact that their GDP per capita is still kind of in that middle income trap. Yeah.
I was talking to my brother this morning, and he was explaining to me that the Belt and Road Initiative is itself starting to fracture now because some of the nations they've been loaning money to can't afford to pay back. And there has been this idea that would give China a claim on perhaps those ports or infrastructure projects they've built, but some of these countries are turning around and just saying no. And also there was the unveiling of Europe's competitor to the Belt and Road Initiative, a $340 billion, was it billion or billion euro investment in similar projects worldwide. What do you make of that? Do you think the West was slow to catch on with the Belt and Road Initiative and that threat of that soft imperialism?
I think we were. I think we basically maybe didn't expect it to occur so rapidly out of China. There are geopolitical experts that can probably go into the background discussions way better than I could.
Yeah.
I mostly can look at the numbers and say, this is what's happening. Here's what's been said by the different countries. China has been in some ways pretty clear about their intentions with this, at least externally. It's not really been a secret. They've not been like hiding this. It's not really it's an open fact that it's happening. And so, they've also been experimenting with, using, I don't know what blockchain it was, but they were using blockchains to basically do purchases of like iron from foreign producers of it. And so they've been experimenting with ways where they want to be so it's a couple steps. One is they stopped using treasuries as a store of value, or at least they stopped adding to their treasuries. They still have them, but they're not adding to them anymore. And then two, they want to find ways to have a medium of exchange that is outside of the SWIFT system. They don't want another country to cut them off from buying commodities and trading with their partners. And so early phases of that included all sorts of testing. They have like a Singapore technology firm help them out, and they would do these technology experiments. And now, of course, the headlines are the CBDCs, where they basically can have programmable money, and they can trade with some of their trading partners outside of the SWIFT system. And so, to the extent that continues working with them, and they have a lot of clout because they're such a large trading partner with most of the world, right? So over the past 20 years, the United States used to be the biggest trading partner with most countries, and that's shifted more and more towards China, where the majority of countries, their individual biggest trading partner is China. And so the fact that they have all those pieces together gives them a pretty significant shot at being able to de-dollarize their payment systems, and we're seeing early signs of it. So a lot of it's centered around Russia, in the sense that Russia trades with Europe, China, and India, and some other countries now, either completely or partially outside a dollar-based system. That can include euros. So you can have an interesting thing where Russia and China trade using euros. You can also have their local currencies, like Russia and India. They can use their local currencies to do payments.
Do we know how much progress China's made with their CBDC?
It seems like a lot. They've been actively testing it because, lately, we see in the past year or so, Western central banks are talking about, exploring it. Whereas China, from what I've seen, they've been testing it, researching it, I should say, as far back as 2014. Once Bitcoin was around for a while, and then once you had the emergence of initial stable coins, I think they woke up to that pretty quickly. And so they've been testing that for a long time. They've already actively tested their CBDC in many cities. it works in that sense. I think they're still trying to roll out all the details and make sure that the rollout process goes smoothly. But yeah, they're pretty far along on that.
Do we know what blockchain they use then?
I believe they're using their own custom one, but don't quote me on that because I'm
Okay.
not the. I've read about how some of the details work. Like, so for example, with between two phones, you can make a transfer offline. You don't have to have internet for it, which is important when you're in like rural China. So essentially, this kind of competes with cash. For example, it doesn't really. There's different types of CBDCs. People assume that if you have a CBDC, it means like banks don't exist anymore, just directly from the central bank, whereas it's not always like that. And so, for example, their approach, at least initially, is banks are still a thing, but for example, instead of trading cash in a context where you might use physical cash, you would use this CBDC instead. And then also it can be useful for those international trading partners where they say, okay, if you want to buy our technology, they make a lot of equipment. They say, okay, you buy it with these CBDCs. So we'll buy commodities from you using the CBDC, and then you can use those to buy our technology. So basically, they have that trade happening in that currency if they set it up if they basically meet their goals.
Is the idea to completely replace the financial infrastructure with a CBDC in China? And do you imagine a scenario where if tourists are coming in, they would have to exchange their currency? Or do you think they will run the CBDC alongside Visa and MasterCard payment networks?
Well, I mean, they already exclude a lot of Western payment systems.
Right.
So there are a lot of people that travel to China and report that a lot of the countries that developed later, like China and India, for example, they leapfrogged a lot of the credit card type of payment systems. And they went right to mobile payments. And so in China, you have those two big mobile payment providers, and then you'll add CBDCs to that. Again, it doesn't fully replace those, at least not in the current kind of vision of it. It doesn't replace those, but it's another way to pay. And so essentially, when tourists go to China, they all in many areas they need to use their local payment systems, and that further strengthens it. But I think the international version is the one to really focus on because it means that their ability to transact internationally, they can have that kind of quote unquote trusted way to do a transaction without going through the dollar-based system.
Okay, so just trying to imagine in our crypto world that China has its CBDC and Russia wants to trade with China. They want them to use that CBDC. Do we imagine a scenario where Russia has its version of the wallet and they are holding their value in a local wallet within Russia? Or is it more of an IOU? I can't even imagine the infrastructure for this.
There are certainly people that can go into way more detail, but essentially, right now, you're even in the current infrastructure, you're reliant on the other country acknowledging it. And so, for example, there have been politicians that talked about selectively defaulting on the treasuries that China holds, which is interesting because that pretty much tells China, don't keep increasing your treasuries because you have a vulnerability. China's treasuries are only money good if the United States decides that they are. And so essentially at the end of the day, most of these systems rely on some degree of trust. They're not completely trustless. And so however they set that up in the technology terms, essentially Russia, yes, they could have a wallet and go along with that system. And essentially the way it would work is China says, okay, we want to be able to use this currency to buy your oil. And then you can go ahead, you have that currency in your reserves now, and you can go ahead and use that currency to buy some of our tech equipment. China's exports surveillance equipment, for example, a lot of countries like, whatever the case may be, but all sorts of phones and basically the broad types of electronics and all sorts of equipment. And so they both have trade that the other one wants, and China can say, let's use this currency. And there's, depending on the country that they have clout with, if it's a very small nation and that they're very reliant on trade with China, China has a better probability of getting them to use that. Whereas maybe Russia says, we'll use a little bit of that, but we also want to use euros, or we also want to use rubles, for example, because they have some clout as well. So it really depends on the individual countries in question.
But it also therefore puts pressure on China to maintain a stable currency as best possible.
Yes, and in recent years, relative to many other currencies, they have. And so there was a long period where they were holding stable, and they were actually strengthening for a while. Then they went on this devaluation back in 2015, but it wasn't as large as some people would guess. It wasn't like one of those emerging market currency spirals. They did this kind of targeted devaluation, and then there was this period where it's been strengthening since then. This year, for example, the dollar had a relatively strong year compared to many currencies, especially compared to the euro and the yen. But China's currency is actually up a little bit compared to the dollar. And if you look at some of the responses to the pandemic, for example, China did not do massive fiscal stimulus. They did not increase their money supply very rapidly. They have some of the better yield to inflation ratio out there for their government debt. It's when you look at it quantitatively, it's pretty attractive sovereign bonds compared to some of the other types of sovereign bonds that are out there. And so they actually do seem. This again goes back to the middle income trap, where they previously had an incentive to weaken their currency because they wanted to have that export advantage. But now that a couple factors are coming together. One is they want to make sure they can secure commodities. So that means they want to have their currency strong enough. Two, they're having a demographics issue that's pretty well known that they have an aging cliff that is faster than many other countries, and that's not good for an export nation. You want to start shifting to a consumption nation when you get to that, or at least a more balanced type of approach. So I think the fact that they kind of got everything they're going to get out of being a cheap exporter, and now they want to have advanced technology, they want to be a little bit more consumption driven, and they want to be able to buy outside the dollar. And so actually you are starting to see a more stable currency out of them. And it does seem to be one of their priorities, where they're willing to let companies fail, and they're willing to not do a lot of fiscal stimulus in the face of problems if it means maintaining, a pretty strong currency.
Is there currency at any risk from the property sector within China? Because we know that's pretty fragile right now.
Well, absolutely. Any currency is vulnerable to the overall economic prospects of that country. And so one of the biggest – so before we mentioned one of China's biggest weaknesses is the fact that they're very reliant on commodity imports. Mm-hmm. Their other big weakness is they have a very large real estate bubble. Basically, Chinese citizens, for multiple reasons, including cultural reasons, invest heavily in real estate. Many of them, when they they already have a home, they go ahead and then they get a second and a third property. And that's also spilled into foreign markets where they buy Canadian property and Australian property especially, but multiple countries. There's a lot of Chinese buyers kind of propping up those markets. Those markets become very expensive for that local economy. When we compare them to Chinese property, you can actually see why they want to diversify, partially because the properties are not necessarily less expensive when they go abroad, and two, because they have, it's from their perspective, they want some properties outside of China. And so I would say that basically a slowdown in their real estate sector is a really big deal. Now, it's something that's inevitable. So China's actually been one of the better countries at deflating bubbles gradually. They've had these kind of rolling bubbles. And because they're relatively top down, and because most of the debts are denominated in their own currency, right? So they do have dollar-based bonds, but it's not super large relative to their reserves or relative to their GDP. A lot of it is internal, and so they're able to shuffle the books around and kind of diffuse things slowly. Now, the risk is that one time they won't be able to do that, and you have, the big quote-unquote China collapse that a bunch of China bears are looking for. But so far, for a very long time, they've been able to go through these cycles. And we're kind of seeing how they navigate that now. It's certainly a risk because, if the country's facing inflation from food and energy, and basically having there's been reports of power outages, things like that, because they're not able to always get the amount of commodities they need. And then two, if you have real estate not doing very well, that can sow public discontent. And so they do have that, they're threading that needle. And so we're going to see how that plays out. So far, it seems like 2021 was the year of kind of crackdown. And I think what they're aiming for is to have 2022 be the year of the rebound, because it's a politically important year for them. So I think that they've gotten a lot of the pain out ahead of time, and then we're going to see how well they do that U-turn.
Politically important because Chairman Xi has to reconsider whether he's going to stay in power. I don't know the details, but
yeah, essentially,
does he just choose whether to stay in power?
Well, I mean, they have the whole Politburo. And it really comes down to individuals, kind of how much power they can consolidate. And he's been able to consolidate quite a bit of power, where he's not officially some sort of supreme leader, but for a lot of intents and purposes, he has quite a lot of power. And I think the consensus is looking like he's going to have this extended time in leadership, which goes against a lot of Chinese recent history. And so basically, that's kind of a big decision point for China and basically the leaders in charge there. And so a lot of things have to be going well in China from his perspective to make sure he gets that. So he has to make sure that the elites are content enough with his rule, that there's no widespread public issues, and that there's been no recent crises. And so if they get a lot of the pain out ahead of time, and then they have that really strong year going into that, I think from his perspective, that increases his odds of that ongoing leadership going smooth.
I wonder if we'll ever see a scenario where, similar to dollarized nations, we'll have, what would you say, one-eyed nations?
I think it's possible. I think it's somewhat premature to assume that's necessarily going to happen, but I think it's the further this develops, it's not an outlandish thing that it could happen. And people often think that a reserve currency has to be binary. Like you either have the reserve currency, you don't. Whereas in reality, it's somewhat of a spectrum. So the United States has quote unquote the reserve currency. It's very dominant. But the euro and the yuan are also these contenders where they're not really in a position to just replace the dollar and become the new kind of just by far dominant global currency. But really what they're aiming for is to be regional reserve currencies. They want to be able to trade with enough of their partners for key things they need in their currency. And so I think you certainly could see, for example, maybe some small African countries become yuanized, if that's a word. But it's not something I'd have. Yeah,
I think we just invented it.
I think we invented it. Maybe Petro-yuan, yuan is a word. So,
and Bitcoinized is a word.
Bitcoinized is a word.
Yeah, we can do it. I can't really say it. Yuanized. Yeah. I think what's really interesting looking over the next decade is whether we see the consolidation of currencies. We have dollarized nations, but that really is a decision on the country itself, whether it wants to go into a dollar standard. And again, I'm way out of my field of knowledge, but how a country does that. But in this world where we now have Bitcoin and digital currencies, one of the conversations or one of the things I put on the table with Nick Carter is in a country like Turkey, where the currency has collapsed and people have talked about, Bitcoin is a great lifeboat for people there, but really, yes, to an extent, but also it's volatile, so it's not really useful day to day. And actually, for a lot of people there, maybe the Tether or any form of stable coin, any form of stable coin is a better currency to have. And you could possibly see this kind of black market or bottom-up dollarization of a nation just through the local people saying, we're not having this anymore. Like if I was in Turkey, I would be converting my lira to both Bitcoin and digital dollar right now rather than holding a collapsing currency.
Yeah, no, I think so. Basically, yeah. It also, there's cultural elements. So, there's multiple local options too. They can buy gold as long as they're not blocked from doing so. It's easier to do that with gold than with something like Bitcoin or even stable coins. And also real estate, but again, that can be illiquid and it's not accessible for everyone. And so I do think that things like Bitcoin and dollar stable coins are another avenue for them. And so depending on someone's needs, there's all these different options. In the long run, of course, stable coins are not an ideal option because you're losing purchasing power over time, right? So you're not really getting paid interest, and yet the dollar is becoming worth less in terms of real assets most year after year after year after year, sometimes at a higher rate like we've seen in 2021. And so it's not necessarily something you want to store the bulk of your wealth in, but sure, absolutely when your own currency is falling rapidly, the fact that the dollar is inflating at like 6% is way better. Well, official CPI, right? So when they can jump onto the dollar and hold that until they figure out what they want to do and they want to put in other assets and they just want to hold that for like 6-12 months, it makes perfect sense. So as a percentage of what they're doing, it absolutely makes sense for them to get into stable coins in many cases.
But do you see that scenario of currencies consolidating around the world?
I think we've been seeing it for a while.
Okay.
And I do think that's probably a trend that's going to continue.
Okay. So the role of Bitcoin in all of this is that it's obviously banned in China. And it feels like it's an opportunity for the US. I was talking to Austin Hill about this beforehand. But by the US being open to Bitcoin, they're actually open to the people of the US being able to hold something that appreciates in value, which could raise up the wealth and the strength of the US itself. And I know the regulators have to walk a careful tightrope of protecting the dollar, also wanting to have mass surveillance. But it feels like it would be a geopolitical smart geopolitical move for the US to be quite friendly towards Bitcoin.
I think it's a lot of people take for granted that the current system benefits the US. And as we discussed, in many cases it does. It basically extends our hegemonic reach, but at the cost of our own domestic vibrancy, right? So there's a knee-jerk reaction for politicians, I think, to defend the dollar system when if they go down the rabbit hole, they realize that for maybe 90% of Americans, the dollar system is not really working for them anymore. So there's that. And then two, even alongside that system, as you pointed out, there are a lot of benefits from being the center of Bitcoin, basically having a lot of the hash rate and a lot of the holdings of Bitcoin among your private companies and private individuals. And so I do think it makes sense that you want to keep that culture of inviting invitation, being the hub that companies can come and develop on, so you get all the tax revenue and all the employment from the jobs around the space, as well as the wealth that can come if that ends up being the correct move. If Bitcoin goes up 5 or 10-fold in market capitalization and the Americans hold a very large chunk of it, that obviously benefits the United States. And so from regulators' perspective, they don't like the fact that you can do permissionless payments. They want to be able to surveil and block transactions that they don't want. Maybe not quite to the extent of China, but most countries around the world want some degree of that. That is usually more so than what most private citizens would think is acceptable to say what they can or cannot do with their own money. And so I think they are walking that tightrope. But I do think, if I was a political leader, I would absolutely embrace Bitcoin because
Bitcoin.
Yeah. Bitcoin. Misspoke.
Bitcoin is the UK CBDC.
Yeah. Yeah, we'll see how far they get with that. But
yeah, I've got a comment on that. I'll come back to that. Well, I'll say it now. One of the things I worry about the CBDCs is that we benefit from a fractured financial system in that if one part breaks, you can use the other part. If my Visa goes down, you can use your MasterCard, or you can use Amex, or you can use cash, or you can use Bitcoin. But a system that trends toward one centralized CBDC, I don't feel like it puts the whole economy at risk.
Absolutely, because the whole economy can shut down if that stops working. And we've seen, for example, FedWire can go down. It's not unheard of. And so these central systems can go down, and it can impact everything. We've seen, for example, just in recent days, Amazon Web Services had an issue, and countless businesses that you'd have no idea that they go down. You don't realize that they're running on Amazon Web Services. Imagine if they had 100% market share, right? And so it's the same thing with currencies. And that's why, most people that travel a lot, it's nice to have, physical currency with you just in case, you never know when just your car is not going to work for some reason. You never want to be without payment. And if you're 100% reliant on centralized, internet-based technology, that's an inherent vulnerability.
Do you think we'll get to the point with Bitcoin where the long-term vision that some people have had that banks will settle in Bitcoin, oil trade will be settled in Bitcoin? Do you see that as something that could happen?
Well, I think the longer it goes, the less outlandish that sort of scenario gets. If you were to call that when Bitcoin is 500, it looks sillier than when you call it when Bitcoin's at 50,000, for example. As roughly $1 trillion asset, it's becoming meaningful on the macro scale. I think if Bitcoin continues to get adoption and continues to grow in market capitalization and liquidity, it becomes increasingly useful as a reserve asset, right? So you start with the fringe countries, the ones that are either kicked out of the dollar-based system or they're already dollarized and they want to, like El Salvador, for example, they want to do this move to attract all the tourists, attract the capital, lower remittance costs, a bunch of reasons, even just, put their name on the global stage in a way that it wasn't a year ago. So there's those incentives. But basically, the bigger it gets, the more useful Bitcoin becomes as a reserve asset. It becomes another way for Russia, for example, to make themselves more sanction resistant. And again, you might not always agree with the countries that might use it, but if you understand their own incentives, you can see why they might become interested in that technology. And so I do think that the bigger it grows, essentially this uncensorable public ledger that's quite secure is attractive for individuals, companies, and nation states in many cases. And of course, it has to get big enough to attract those larger pools before they start taking it seriously.
Feels like there's an incentive for everyone to use it, but for different reasons.
Absolutely. Basically going literally from cypherpunks to, unsavory types of either countries or individuals, or just people in Turkey that want to protect their purchasing power, or people in the United States that want to protect their purchasing power. Basically, there's one of the common problems worldwide is how to store your value, how to store your wealth, right? Especially in this era where we're essentially in financial oppression. So interest rates are below the inflation rate. Usually in terms of the official inflation rate, let alone whatever the quote unquote real inflation rate is, you're not really keeping up with the creation of currency. And so there's people are monetizing all sorts of things. They're monetizing art more than they used to. They're monetizing their homes. So you have home value to income ratios going up dramatically. You're monetizing stocks where you say, I don't even know what the stocks do. I just want to shove money into an index fund because it's better than cash. So we monetize all these other assets. And so the world pretty much has a store of value problem, and it becomes worse for emerging markets that don't have access to a lot of, you can't buy fine art. You can't, real estate is trickier. You can't buy the S&P 500. And so Bitcoin is one that they can all hold on their mobile phone. And then, of course, you have countries like Iran that say, okay, we want to be able to buy things if we want to. And there's this permissionless payment rail that we could use. So there's also pretty much any actor out there can use Bitcoin for a purpose.
What a time to be alive, Lynn. It's not all good. There's a lot of scary things happening, but we're living in this world of potential currency wars or actual currency wars between major superpowers. But at the same time, any individual can exit the system because 13 years ago, somebody launched a protocol that's become this decentralized currency of the world. If you'd explained this to somebody 15 years ago, if you'd explained Bitcoin, said, yeah, but we're going to have a new currency that's going to come along. We don't know who the creator is going to be. It's going to be completely decentralized. It'll be the fastest growing currency in the world, and the governments can't switch it off. People have thought you're fucking mad.
And it's funny because if you look at old quotes, there are people that were Bitcoiners before that Bitcoin existed. Like if you look at Hayek, for example, he's like, the only way that you're going to have good money again is if someone can introduce a sly, roundabout way to separate money from state. He's basically describing Bitcoin before it existed. Again, Henry Ford talked about a currency of energy and that gold was too centralized.
Sovereign individual.
A lot of people discuss this thing. And so it's kind of remarkable that it happened. And I think we can envision now two very different futures. So we know that money is going to be increasingly digital, more so than it already is. Right now, we think of it as digital. People joke and they're like, well, the dollar's already digital. It's like, well, it also runs on those very old pipes, for lack of a better word. There's this old legacy infrastructure, and then we interact with it in a digital way, but it still goes through these centralized pipes. And stable coins are quite different ways to transmit value. And so obviously money's going more digital, and it becomes, is it going to be more state and surveillance controlled, right? So almost like using Satoshi's invention against him, where this technology can enable CBDCs, it can enable essentially highly regulated private stable coins that might as well be CBDCs. For example, they can blacklist any addresses they want. They can block transactions. You have that approach, or you have Bitcoin, where it's kind of a defense against nations that are maybe being improper. And it's one of those things where if you're in a developed market, it can sound almost like you're an anarchist, for example. If you're you want to separate money from state, but it's not easy. It's not hard to envision it if you live in Russia, or you live in China, or you live in Nigeria, for example. Right? There's been cases that have been, I think, at this point well documented by the media, where, for example, Putin's opposition that is heavily repressed begins using Bitcoin. Because they can keep their payment, they can get donations, they can send payments. You see it happening in Nigeria, where there's protest groups pop up. They're protesting police violence, and then their bank accounts get frozen, and they can resort to Bitcoin. And so, there's been analysis showing, I think, from Freedom House, showing that over the past 10, 15 years, the world's becoming slightly more authoritarian around the margins. We had this period from, say, the 80s and 90s. We started entering this period of liberalization. We had a declining authoritarianism, but now it's on the rise again. And I think also that the pandemic showed that even in developed markets, we brought up all these new debates about human rights and restrictions on mobility and things like that. And so in that type of world where technology can increasingly be used to surveil and control populations, that there's this technology that can actually also enable them. And I think we can envision two different futures depending on which path ends up winning.
Well, centralized versus decentralized. We actually released a show today that I recorded with Mark Moss. The title will seem hyperbolic, but it was Bitcoin what was it? The fate for the future of humanity, or the fight for the future of humanity, where it's essentially a world that's becoming more centralized. The only way to fight back against that is decentralization, and therefore, what is the best tool we have? Well, it is Bitcoin. And it sounds hyperbolic, and I think for some people who aren't even in the world of Bitcoin, they think this is absurd, but it might be right.
I think what people miss is that history goes through these big cycles, these big pendulum swings.
Yep.
And people naturally have recency bias, where they look over the past 30, 40 years and they can't envision the world being any different. Whereas that 30 and 40 year period looks crazy compared to people in the prior 30 or 40 year period.
Yep.
It happens with, for example, like laborers and capital. You see this political shift back and forth between who has more of the power. Sometimes you hit an extreme, you have a revolution, or you just kind of, have a kind of a partial revolution and have like a populist swing back. So there's that keeps changing. As we talked about, these monetary systems keep changing. So you go from gold standard to failed gold standard to Bretton Woods to petrodollar system. You go through these changes over time. And so right now we've been in this kind of period of increasing centralization, increasing digitization. And if you go back to, for example, sci-fi writers, they've been kind of forecasting this, talking about that the more technology exists, the more it enables governments to have kind of almost a perfect authoritarianism. Like imagine Soviet Russia if they had the surveillance that you have today, including financial surveillance and surveillance blocking, right? That's essentially what China's kind of moving towards in some ways. And so I think if people think internationally, some of those things seem less crazy. Even if their local country might be benign in the relative sense, I think it's one of those things where you can like government, but still view that at the end of the day, the government should be more afraid of the people than the people are afraid of the government, right? So it's always good to have that tool that kind of keeps powers in check to avoid that kind of, absolute power, the ability to stop transactions, block anything, surveil anything, and then there's no checks anymore.
So what about Ethereum, Len? Could that be world money? I saw you wrote another article. I read it. That was an epic article. I'll direct people to it, but you did a review of proof of work versus proof of stake. I don't think I can let you leave today without just touching on that very, very quickly. Firstly, were they mean to you again?
Not really. I mean, I think
they were last time.
They were. Well, it depends. Every community has individuals. So some people engage constructively, other ones engage aggressively. And my overall approach, I try to characterize it as there's Bitcoin, and then there's everything else is essentially a security. It's either like literally security, or it's essentially very equity-like, right? So I generally don't go so far as to say that every other application of blockchain is, worth absolutely nothing. It's not worth exploring. I'm not on that end of the extreme, but I don't view them as money for sure. I view them more like equity platforms, and many of them use scammy tactics. Some more, again, there's a spectrum. So you have outright scams, and then you have well-meaning projects that are advancing things in ways that maybe Bitcoin has been slow to, right? So in a sense, they're kind of these little trial areas. But there's a difference between that and money, right? So you have kind of this startup equity-like thing versus sound money. And so essentially the downside of any blockchain other than Bitcoin is that they're not sufficiently decentralized. So Bitcoin starts with high decentralization and then makes really rough trade-offs to have that decentralization. Essentially, blockchains are really inefficient databases. And in order to have it be decentralized, at least with the technology that we currently that we know of, you have to have a very small and tight database so that it can be held very, very peer-to-peer, and that it's resistant to any sort of centralized attack surfaces. You don't want to be like the White Walker army, where if you take out the Night King, they all die, right? You don't want that. That's how most blockchains are constructed. They have a Night King, and if you take out the Night King, the war is over. Whereas you want to have it so that you're a zombie apocalypse where there's every unit is completely autonomous. There's no centralized attack surfaces, and so Bitcoin is it's maybe not perfect, but it's by far the closest thing we have to a truly decentralized system. Whereas all those other ones they make fewer of the trade-offs that Bitcoin did, and therefore they have these bigger attack surfaces. And so essentially some of them, in the long arc of time, when we get through periods of speculation and we see what technology sticks around, maybe blockchains are useful for certain applications. But the more they're useful for, in many cases, at least on the base layer, the more prone they are to centralization, being changeable, and therefore not really being that kind of money for enemies or global money or global collateral, whatever you want to call it.
Or ultrasound money.
Well, I think that whole thing popped up because, essentially, if you define how sound your money is by what the inflation rate is currently, like you can imagine two systems. Imagine, for example, a country like Singapore says we're going to maintain this money supply, and then they do it for a few years, and they say we're ultrasound money now. But it's still the case that at any given time, if you have a change in leadership, for example, you could change your monetary policy. Whereas something like gold, for example, if you look over the past century, they've never really made more than like 2% of new gold per year, right? It pretty much, no matter what gold price does, you have that hard constraint in terms of how much gold you can produce. Compared to that fiat currency system, that's a much more sound system. So it's not just whether or not you have inflation or deflation, it's whether you can even change it or whether a centralized entity can even change it. And so it's not just about being quote unquote deflationary or less inflationary. It's about how reliable, how much trust we place in the idea that 10 years later, that exact monetary policy is still going to be in place.
But back to proof of stake, the TLDR.
That I essentially viewed as equity-like, where it's inherently centralization. I've seen it described as kind of a proof of work in disguise in some ways. And it's one of those things where maybe it's useful for certain applications, but it's not one you choose if you want to maximize decentralization and have it be this kind of global money that's rather resistant to state attacks.
Yeah. Well, we did it. We've had a good year, Lynn. We've made 11 shows, I think. We missed one.
Yeah, I was traveling.
You were traveling.
Yeah.
So selfish. What are you looking forward to next year?
I'm looking forward to see. So right now we're obviously in an inflation period.
Mm-hmm.
I'm looking to see what happens with some of these transition periods, right? So we've had this period where the United States did a lot of fiscal stimulus, and we're facing kind of a fiscal cliff. We're going to see how they navigate that. They're also now trying to tighten monetary policy into this inflation. On the other hand, China went through this big crackdown year, and based on political realities, we're probably going to see them trying to have the dust settle and kind of move up a little bit. And so we're going to see how these cycle turns play out. And Bitcoin's big enough where it's a macro asset now.
Mm-hmm.
It's like if you use Google as an example, when Google was a young company, regardless of what the economy was doing, it could grow at like 100% a year because it's just eating market share from other advertising methods and other search engines and things like that. But once it becomes by far the dominant player in its industry, it now is the economy. So if the economy slows or accelerates, Google's affected. And Bitcoin's kind of like that, where when it's super small, it's its own thing. It always had kind of some linkage to liquidity in some ways, but when it becomes more institutionally held and more widely held, it becomes a little bit more tied to economic cycles. And you can see, it obviously liquidity affects it very much, but also things like inflation and other variables. So I'm curious to see if we start to get some decoupling, say with Bitcoin compared to growth stocks or compared to the stock market in general. I'd be curious to see some of those. We could see inflationary pressures damage company margins, for example, and you could see stocks run into some turbulence, while maybe, the advantage of commodities in inflationary environments is they don't have margins. They are, they're the things that are in many cases eating into other companies' margins. And so you could see a decoupling. And so there's a bunch of things like that I'm looking for, and just looking for ongoing maturation of the industry. I'm looking to see some of the developments that might happen because of Taproot, right? So it's one of those things where maybe it was overemphasized initially, but then underemphasized when you look out several years, the things that could develop from it. I'm watching Lightning. I'm watching all sorts of things. There's all sorts of development that's happening that I'm excited about.
Well, it's going to be a big year. Thank you again for everything you've done this year. I think you're brilliant. I really do. I think everyone does. Whenever I post a show, it's constant, amazing comments. I still can't understand how you know so much stuff, but it's an absolute pleasure to talk to you every month, and I really appreciate you coming on the show. I wish you a happy Christmas and New Year, and let's see what we do next year.
Well, thanks for having me. I'm glad we were able to meet in person and do this for the first time in person.
Yep.
And so hopefully people enjoy it.
We had a nice meal the other night.
Hmm?
We had a nice meal the other night.
We did, yes.
A little bit of champagne. little bit of champagne for Christmas. But no, it's great to meet up and see what we can do in 2022.
Absolutely excited.
Take care.
You too.